Hello and a very warm welcome to this webinar, Promising Outlook for Italian Banks, brought to you by Scope Ratings. My name is Keith Mullin, and it's my pleasure to be your moderator for today. I'm delighted to be joined by Alessandro Boratti, Scope's lead analyst for Italian banks. In a moment, Alessandro will take you through a presentation, briefly summarizing 2022 performance and talking about his expectations for this year amid areas of uncertainty. After that, we'll be delighted to take your questions, so please do type them into the questions function on this platform. Alejandro did publish a research note on this subject, and we will make this available for download towards the end of the session, and I'll explain how after the Q&A session. So that's it from me. Alessandro, hi, great to see you. Over to you.
Hi, Keith. Thank you, and good afternoon, everybody. So I would like to start my presentation by giving you a brief overview of the 2022 results for Italian banks. It was, of course, a strong year for banks, thanks to an increase, mainly increase in net interest income on the back of widening interest rates, margins, and also still resilient lending growth despite increasing borrowing costs for families and companies. The increase, you can see it in the chart on the left, the increase in net interest income more than offset the decline instead in other revenue components mainly due to the weak financial markets performance over the year. The inflation impact was pretty much contained for the bank's costs over the year. We know that lenders are very committed in trying to improve efficiency and cut costs, and so 2022 was another year that proved that this commitment and these efforts, and you see it here, the increase in expenses were pretty much minimal. There was a normalization in credit losses after a year, 2021, that saw the write back of losses that had been taken in 2020 during the COVID pandemic, and that did not materialize later on. And this year was a year of normalization, and the increase you see here is actually influenced by the losses on Russian exposures, mostly by the largest Italian banks, the two largest Italian banks. I would remark here that for Italian banks, this was, let's say, a return to their anti-cyclical nature, in the sense that in a period where the economy slows down and margins for most of industry shrinks, actually banks were able to increase margins thanks to higher interest rates and also to generate higher profits. Now, looking at 2023, we expect the trend starting in 2022 actually to continue, and this is because we expect now a further increase in policy rates, and this will fuel banks' margins yet again, because you need to know that assets reprice at a faster pace than liabilities. In this case, it's because banks' liabilities consist mostly in deposits, which have a loss of sensitivity to higher rates, basically. So we expect revenues to continue to grow. We expect also. We don't expect big changes in fees, perhaps a small increase, and perhaps there could actually be a recovery of trading losses that were recorded in 2022, and so overall revenue should actually grow at a strong pace in 2023. On the other side, we have here in the slide the overview of banks' main banks' guidance on their cost of risk for 2023. We expect, we expect this guidance actually to be quite realistic, a guidance of a 40 to 50 basis points cost of risk, mainly due to two factors. One, the fact that banks don't forecast an material increase in default rates, and so they expect asset quality to remain very strong. And on the other, we see it here in the blue bars, the accumulation of generic provisions that were piled up during the past 2 years are still available and can be used in event of a higher default rates to cover losses and maintain a good cost of risk for the year. So overall, we expect another strong year. We'll see at the end of the presentation there are, of course, downside risks to these forecasts, but for the time being, it looks quite promising. Now, I would like also to speak a moment on asset quality. Italian banks have done a lot in the past years to improve their gross NPL ratio. They have actually caught up with the euro area average. And now for most of banks, they are actually not only at the targets, but actually they have improved compared to their medium-term targets. There is still some room of improvement for a few banks. And for this reason, we expect actually NPL disposals to continue in 2023. And barring a double-dip recession, actually we expect the gross NPL ratio to decline even further over the year. So again, quite a solid, should be a quite solid year for Italian banks. On capital, banks sit on comfortable capital position at the moment. We expect actually their capital ratios to decline over the year as banks move towards their medium-term targets. Again, the improvement in earnings generation allows them to comfortably continue with their dividend plans. And we know that banks on average target between 2.5 and 30.5% of CET1 ratio. And we see that some banks are much higher than that level. And so we expect actually a trend towards those targets in the coming years or after. So we are quite confident that banks can continue that. And also regulators have been, let's say, more lenient, let's say, on bank distribution after, let's say, the improvement also in the economic outlook for 2023. We think that a big theme for Italian banks in 2023 will be the normalization in funding conditions. A normalization that comes from two elements. The first one is the repayment in TLTRO. And then second, it's derived from the increase in interest rates. Now, again, also here banks are actually in a solid position because over the years they have accumulated a large amount of deposits, most of which come from retail customers, and this large deposit base provides a good, let's say, backstop against the decline in TLTRO funds, and so we don't expect banks to run to jump on the wholesale market for funding. At the same time, the large funding from deposit actually softens the upside pressure on rates, on deposit rates. We can see it on the right, the chart on deposit rates that barely moved, let's say in 2022, they started to increase only towards the end of the year. And we don't expect them to match the same increase of lending rates in 2023. I would like to conclude my brief presentation by discussing briefly the upside potential and downside risk to our, let's say, base scenario. I think the most obvious upside to our base case is an increase in interest rates beyond the 3% given by the President Lagarde in the last meeting. Actually, the market already is pricing a 4% year-end rate, and so, of course, as I told you before, for the time being, higher rates means higher margins and so higher revenues for banks. This could be beneficial. At the same time, there could be, of course, a better than expected economic growth in the Italian GDP, and this, of course, would be a benefit for banks' revenues and provisions. Now, looking at the downside risks, the main one is a possible, let's say, decline, or at least a slowdown in loan origination due to a weakening demand, but also tighter credit standards. This is something that actually the lending survey data is already pointing at, and so something that, of course, could impact banks' revenues. Another one is when, of course, a slowdown instead of the more pronounced slowdown or a shallow recession in the economy. Of course, also that would have an impact on banks' revenues and provisions. I didn't mention it here, but perhaps something that could also impact banks, of course, in an environment of higher and higher interest rates. Of course, these higher rates means also that increasing borrowing cost, and this could also eventually impact banks' cost of risk and asset quality. Although not likely, we expect there could be, an acceleration in deposit repricing if competition increases due to higher rates. And finally, something that we don't deem likely, but is something that always looms over Italian banks, is the potential for a stress on the sovereign bond market, which could either hamper banks' access to the wholesale market or make it much more costly, and this eventually would have, of course, an impact on banks' results. So I'm done with my presentation, and down to you, Keith.
Good, thank you very much, Alessandro. So let's move to some questions. I do have some questions down here, but please feel free to type your questions in now if you have any burning questions you wanted to ask. So actually, Alessandro, I guess starting the questions with where you finished, one of the things that always goes together is Italian sovereign risk and banks' exposure to sovereign, this perennial doom loop. Can you just briefly talk about Italian banks' exposure to the sovereign?
Okay. Well, looking at our sample of banks, the direct exposure is around 100 billion euros at the end of the year. Banks remain clearly highly exposed to the sovereign. This is, let's say, the exposure, the holding of bond securities is the main channel, let's say, the main exposure to the sovereign risk, but something that it's common to all countries. It must be said that although investors remain always concerned over the sovereign link, it must be said that banks have done a lot over the past years to reduce their sensitivity to potential stress in the financial markets, in the sovereign financial market. And what they did basically, they moved their accounting of sovereign bonds from to mark to market to basically another accounting that at amortized cost basically shields banks from volatility in bond prices. And this actually was visible already in 2022. We had bond yields increasing at a crazy rate, Italian bonds, sovereign bonds at around 4%, but the impact on banks' capital was very limited. And actually, those banks that showed a small decline in capital ratios, those actually effects came from bonds other than Italian, for example, German or French. So, yeah, actually, we remain quite reassured, let's say, about this.
Okay, thank you. This is a related question, which is now obviously Scope's a rating agency. Can you just briefly talk about how Italian bank ratings compare against the sovereign?
Okay. Well, our ratings are mostly on subscription, but I can, of course, can comment on that, saying that we rate most of our banks. Most of our banks' ratings are placed in the BBB and A category. We don't apply a sovereign cap on Italian banks' ratings, on any banks' ratings. Actually, these are, let's say, unique feature, I would say, compared to other rating agencies. The fact is that we believe that there is a scenario where the sovereign defaults and banks actually can survive. And this depends on many aspects, mostly the resiliency of business model. For instance, could be business diversification, geographic diversification, as well as their capital position, etc. And so, as well as the in case of Italian banks, the possibility of a support also from supranational authorities, so the ECB as well. So.
Yes, indeed. A very topical question that's just come in, which is the following: how is the unwinding of Russian operations going?
So we have two banks mostly exposed to Russia, Intesa and UniCredit. So they did quite a lot over the year to cut the cross-border exposure. So so not the local assets in Russia, but I don't know, for example, loans to companies, to Russian companies from the UniCredit or Intesa subsidiaries in Europe, and this came actually at low cost for the two banks. Let's say that the issue for Intesa is mostly on the back, at its back. UniCredit still is a large, let's say, subsidiary in Russia. We don't consider it a credit risk for the bank in the sense that the bank itself has given a moderate impact on its capital in a severe loss scenario. We see instead some risks coming from, let's say, reputational risks that could stem from remaining longer in a country which is subject to tens and tens of bans and yeah, that's it.
Okay. We do have quite a few questions coming in, but so I'll keep going here. There's a very topical question here about this news item about the government stopping these Boeing bonuses. Can you talk a bit about how that might impact the banks?
Okay. I think that the impact from this development is actually pretty contained. We believe that first of all, let's start from the data. Super bonus or tax credits make up around 3 or 4% of banks' loan book at the moment, and the same goes for revenues. So from a decline in the let's say from the stoppage of the super bonus, I see let's say a decline in revenues going forward. And in terms of credit, I believe, there could be, of course, some issues with banks' liquidity, with companies' liquidities, but if this will be material for banks or not, I don't think so. So I think that the situation is quite under control.
Yeah. All right. There's a couple of questions about TLTRO. So I'll try and summarize them in one. I think you mentioned just in your initial comments in passing that Italian banks didn't accelerate TLTRO repayments. Can you explain why and how repayments will affect their liquidity positions?
Okay, so banks didn't accelerate on TLTRO repayments simply because it doesn't hurt, let's say, to keep it until maturity. Banks themselves told that for them, they keep it when they think it's still good for lending, and it still remains, of course, cheaper than going on the market for funding. So this is the main reason for keeping it until maturity. Remember that banks already had in their funding plans basically they already expected to repay TLTRO, and so they weren't caught surprised when the change in conditions came out in November. Banks and also ourselves don't expect a big change in liquidity ratios. Of course, there will be some decline. This is normal. But if TLTRO is repaid, let's say, homogeneously, or at least, let's say, they are not repaid at all in once, basically, this doesn't cause a big issue for banks. So it will be manageable.
Yeah, okay. There's a sort of a tweak to the TLTRO question, which is, will higher rates really compensate for all of the TLTRO benefits we saw in the past with regards to net interest income, which you had commented earlier? You said that the continuation of that improvement will continue.
Yes, actually, our banks and our forecasts actually already factor in the repayment of TLTRO. So I don't know if I can change. Yes, here you see in the chart on the left, this NII guidance already factors in the repayment of TLTRO for all banks. And so, yes, the answer is yes.
Yeah, all right. That's easy. There's a question, Alessandro, on MREL and the Italian bank's MREL requirements. And the question is, which is the bank with the highest shortfall? But I don't know if you want to single out an individual bank, but maybe you want to talk about the topic in general. It's up to you.
Yeah. So on MREL, what I can first say is that we don't have much data. Banks are still don't publish all the data on MREL. But what we know also from the Bank of Italy is that the largest banks all meet the requirements. There is still some shortfall. Now I don't remember the data. We can follow up later if needed. But especially for the largest banks, they are all actually in line with their plans in terms of MREL funding, MREL issuance. Apologies. And they are above their requirements. So, of course, this will be more and more an interesting topic for banks, and we will monitor it.
Yeah. Okay, there's a question about, I guess, well, it's quite a specific question, but I guess if we can generalize the subject, do you have any perspective on consolidation in the Italian market? We have seen some activity in recent years. Do you think there's more to come?
So there has been, it's been quite active as a market during before COVID and the initial year during the first year of COVID. Now the situation has been has a bit cooled down, also because of higher and higher valuations. If we see a deal in 2023, I don't know, to be honest. Of course, we all know, we cannot hide it, that the hot topic here is Monte Paschi. Last year, there were actually 2 years ago, there were a lot of rumors on a tie-up with UniCredit. Then they naufragated. Now, to be honest, I don't know. It depends a lot. We cannot say it at the moment. Sooner or later, a solution will have to be found, to be honest. We don't know if there will be either UniCredit taking over MPS or another bank, but we cannot speculate on that at the moment, to be honest.
No,
if you allow me a word, yes, I think the Italian market will remain for a while still a hot market for M&A. One of the most interesting cases, I think, in Europe.
Yeah, very good. No, I was just going to say, I think it's very, very wise not to make any firm predictions about Monte Paschi, given what's happened in recent years. So
yeah.
I guess we'll see what happens. Alessandro, I have no more questions at this point. I did wanted to mention to those of you still watching that if you at the bottom of the screen click on the apps button, and then you can click on handouts, and then the Italian research note that Alessandro published a couple of weeks back, and his presentation for today are both downloadable. So if you do that now, I'll thank you. If I may, thank you for watching. I hope you found that interesting and insightful, and thank you, Alessandro, for taking the time to take us through the presentation and answer the questions. A replay will be available on YouTube, which we can circulate, and there'll be some social media activity with some of the key sound bites as well on LinkedIn, so look out for those. So I wish you a very fun and successful rest of the afternoon, and we will see you again next time. So it's goodbye from us.